Hello everyone, welcome to Weekly China Recap. I'm Xing Zheming. This week, we are diving into a major policy shift from Beijing, one that could quietly reshape China's industrial future. On August 5th, 7 of China's top ministries, including the People's Bank of China, Ministry of Industry and Information Technology, National Development and Reform Commission, Ministry of Finance, and top financial regulators, jointly released a powerful new policy blueprint, guiding opinions on financial support for new industrialization. That may sound bureaucratic, but make no mistake. This is China laying down a 2027 roadmap for a new type of economy: advanced, green, digital, and crucially, financially enabled. This announcement comes with a good micro-timing. Just this week, China's July trade data showed signs of resilience. A 6.7% year-on-year jump in total trade. Exports rose 8%, led by integrated circuits and automobiles. It's a sign that global demand, at least for the high-tech stuff, is coming back. And now, financial policy is stepping in to support and amplify that trend. So, what exactly does this new policy mean? At its core, it repositions finance, not as a background actor, but as a strategic engine of new industrialization. This marks a shift from the old model of direct government subsidies to something more dynamic, market-facing, risk-aware, and long-term capital allocation. Here are 3 things you should know. First, the plan introduces 5 financial pillars, each aimed at a different leverage of transformation. Technology finance, offering patient capital for core innovation from semiconductors to industrial software. Green finance, upgrading legacy infrastructure with low-carbon loans and green bonds. Digital finance, bring AI, big data, and blockchain into manufacturing finance. Industrial chain finance, de-risking supply chains through smart credit tools. Cross-border finance, making it easier for Chinese firms to expand globally and for foreign capital to enter targeted sectors in China. This isn't just a wish list, it's backed by real pilots. Second, this is a structural shift in financial governance. Until now, industrial policy in China has relied heavily on direct administrative support, subsidies, credit quotas, and special approvals. This new plan flips that logic. It encourages banks and funds to adopt differentiated lending models, one for startups, another for industrial giants, yet another for green upgrades. There is even a push for joint talent training between banks and tech parks, building a new generation of hybrid professionals fluent in both finance and manufacturing. In short, the goal is clear. Less window guidance, more embedded incentives. Less one-size-fits-all lending, more sector-specific credit models. All while guarding against one key danger, what the document bluntly calls involution-style competition, short-term, low-end races to the bottom. Third, this aligns tightly with China's bigger macro playbook. China's future won't be built on real estate or old-style expansion. It will come from quality growth through science, green development, and industrial depth. And now the financial system is being tasked with making that future possible, not by flooding the system with cheap money, but by allocating capital in a way that unlocks real productivity. The 2027 target is ambitious, a mature and diversified financial system that fully supports high-end, smart, and green manufacturing. It's a structural bet, not just a stimulus. Zooming out, the timing of this policy matters. China's exports are stabilizing. Tech sectors are gaining traction. The question is whether this newly minted financial blueprint can turn ambition into execution. Whether patient capital, decentralized pilots, and risk-sensitive innovation can truly build China's next industrial base. all eyes now are on the local rollouts, and whether these new financial engines can scale up without overheating or stalling. And that wraps up this edition of Weekly China Recap. I'm Xing Zheming. Thanks for tuning in. If you found today's episode helpful, don't forget to share it. And as always, if there's a topic you'd like us to explore, feel free to reach out. Until next time, stay sharp and stay informed. Goodbye.